Hello students, this is Dr. T.G. Uma, Assistant Professor at Maharani's College. Now I'm here with Unit 2, which is on the redemption of debentures. So with session 12, sorry. So the topics that I shall be covering here are advantages, disadvantages of debentures, and the difference that we have between the debentures and the shares. So we know that debentures are a debt of form of a capital in the company. So they sometimes will have charge on the assets of the company. So they're one of the preferential creditors of the company. So debenture holders are supposed to get interest every year on the amount that they would have uh, given it to the company in the form of debentures. Now let us see what are the advantages that the debenture holders have. The control of the company is not surrendered to the debenture holders because they don't have any voting rights. Equity shareholders are the real owners of the company, actually speaking. So debenture holders form the debt form of capital in the company. So that being the reason that doesn't uh, limit the organization as far in its management is concerned. So they don't have any play in the management of the company. So trading on equity is possible. So debenture holders, as I mentioned, are a debt form of a capital in the company. So if in case a company wants to leverage on equity, so it has to trade on equity. I mean to say, if a company is borrowing everything in the form of, or if it is capital, I mean, if it is getting the capital only through equity shareholders, then they'll not be able to get the benefits. So if they get the debentures also, then the profits that are available to the equity shareholders will rise. So that is called as trading on. It will be even more profitable for the organization to combine the equity form of capital with that of the debt form of capital, particularly the debentures. So interest on debentures is allowable expenditure. So it can be allowed under the Income Tax Act. Hence, incidence on tax of the company is decreased. So you can charge it to the P&L account. So when you charge the debenture interest in the P&L account, then the profit figure is reduced to the extent of the interest that is paid. So that gives an advantage to the company to go with this debentures and claim the tax benefits. Debentures can be redeemed when the company is having surplus of funds. So redeemable debentures will be paid during the lifetime of the company when it is when its tenure is due. As far the irredeemable debentures are concerned, it will be paid at the end. So if a company goes for liquidation, based on the preferential treatment that is given to the creditors, will it be that finally the payment is made to the debenture holders. Going with the disadvantages of debentures, it's risky. So if the company fails to pay interest or principal on time, so they can file a petition. Moreover, if they have sometimes, company will have charge on the assets of the company. If it not so, if in case the company fails to do so, then they will have rights on the assets of the company that is chargeable for the debenture holders. There's a limit to which funds can be raised through debentures. So company has a limitation. So the Companies Act gives it that, only certain amount of debentures can be raised. So they need to go by that. It is not suitable for the company with the fluctuating earnings. So if a company is having fluctuating earnings, it will be difficult because the interest that is payable to the debenture holders is a mandatory payment, irrespective of whatever they have in the organization, whether they have profits or not, they're supposed to pay. So that is what is the thing here. So going with the differences between the debentures and the shares. So speaking about the ownership, a debenture is only an acknowledgement of a debt. So they don't, the equity shareholders are the real owners of the company. Debenture holders are the debt form of a capital. They are mainly in the lines of creditors in a company. It's a borrowed capital, is it not? So as a capital, debenture is a paid part of a borrowed capital and shares are a part of owned capital. So return. So return that the debenture holders get is treated as interest, and the returns that is given to the shares is known as dividend payment. So the payment of interest is charged on the profits and is to be paid even if there is no profit. So interest is, as I told you, uh, in case of debentures, irrespective of whether the company earns profit or not, it has to pay. In case of dividend, that is paid to the shareholders only if the company is having dividend, will it be that, I mean, sufficient profits, will it be that it declares dividend. Variation in return. So the rate of return on debentures is fixed. So the rate of return on shares varies. Okay, it depends on the decision that is taken up in the annual general body meeting. Even if it is having sufficient profits also, the company might decide on the percentage of dividend that is payable to the equity shareholders. Certainty of returns. So in case of debentures, so the debenture holders are very certain about the money that they'll be getting from the company, as the rate of interest that they are due is fixed, and the company has to pay. If in case in a particular year it is not able to pay, means they can file a petition, and moreover it gets accumulated and they'll have to pay dividend in the following year when they earn sufficient profit. So such is the certainty of income. Whereas in case of shareholders, it is not so. The company has to earn profits to declare dividends, and that too it depends on the decision that is taken by the, in the meeting regarding the rate of interest that they need to pay. So going by the next point of difference between the debentures and shares, order of payment. So debentures are the preferential creditors. In the preferential creditors, debentures are above equity shareholders. So equity shareholders will be paid after the debenture holders have been paid. The repayment. So repayment is in case of redeemable debentures, it will be repaid after a specified period of time. Or in case of irredeemable debentures, it will be paid at the end during the liquidation of the company. So repayment is not at all possible in case of equity shareholders. They will be paid only during the liquidation. The company cannot change the capital composition, share capital composition in the balance sheet at any cost. Rate of discount. Debentures can be issued at discount. Even shares can be issued at a discount in accordance with the provisions of Section 79 of the Companies Act 1956. Next is with respect to voting rights. The debenture holders do not have any voting rights. They are the borrowers of a company, whereas equity shareholders are the real owners of the company. They enjoy the voting rights. Mortgage. So there can be a mortgage, that is, there could be a charge on an asset of the company in case of debenture holders, but there will not be any mortgage in case of shares. Convertibility. So debentures can be converted into equity shares. Okay, it depends on the type of debentures that are issued. In case of shares, shares can be converted into debentures, cannot be issued. Restriction on the issue of at a discount. There is no restrictions on the issue of debentures at discount, but there is a legal conditions which have to be fulfilled to issue the shares at discount. So this is about the second session under debentures. Thank you.